In the world of day trading, forming your edge requires consistency. The easiest way to be consistent is to keep things simple. Today, we're going over a pair of patterns that are so simple, you'll be able to start implementing them to up your trading game right away. Let's start with imbalances. Imbalances on the chart look like this, a 3-bar or candlestick pattern where the wicks of the outer 2 bars do not overlap. The imbalance is the space right here in between those wicks. Behind the scenes, imbalances form because buying pressure greatly outweighs selling pressure or vice versa over a short duration. In this case, the buyers overwhelmed the sellers and we had a bullish imbalance. The buyers overwhelmed the sellers by pushing so much volume at the ask price that price rapidly goes up before sellers can adjust their limit orders. In this case, the sellers overwhelmed the buyers and we had a bearish imbalance. The sellers overwhelmed the buyers by pushing so much volume at the bid price that price rapidly goes down before buyers can adjust their limit orders. Back on the chart, you'll find that imbalances tend to be points of interest or POIs. POIs, like imbalances, are areas that we can expect price to revisit and react from. Remember the concepts of break and retests from our earlier video? Imbalances are prime real estate for retests. Not all imbalances are created equally, however, and in fact, you'll probably start to see them absolutely everywhere and on multiple time frames. Here's my recommendation. Only concern yourself with imbalances that form as part of a move that breaks market structure. And generally, the higher the time frame, the more relevant the imbalance. Now let's talk 3-point turns. 3-point turns are an entry trigger pattern where price moves aggressively away from the trend for one candle, stalls or shows indecision during the second candle, and impulsively moves back towards the trend on the third candle. The most reliable way to use a 3-point turn as an entry signal is to wait for the entire pattern to form and then enter a market order at the close of the third candle. By doing this, you are ensuring that the entry signal is valid. Just like imbalances, you'll start to see 3-point turns everywhere and you'll begin to notice that some are more reliable than others. Let me give you a hint to kickstart your backtesting. The most powerful 3-point turns are part of a retest. Look for 3-point turns that form in a point of interest, such as an imbalance. Place that stop loss below the low of the pattern or the high, depending on which way it's facing, and either take a sweet ride towards 2RR or you can look to target recent liquidity and trail that stop loss.